Welcome to the Funeral Funds Life Insurance Podcast. I'm your host, Randy Vandervate from Funeral Funds of America, and you can find us at funeralfunds.com. That's funeral, Funds.com. Whether you're interested in term life, whole life, mortgage protection, annuities, disability, business continuation, or final expense life insurance, we have you covered. Our team of experienced professionals will guide you through the complexities of insurance products to help you make an informed decision. In this podcast, I'm going to be discussing 5 challenges seniors face when buying final expense life insurance. As we get older, some things get a little bit more difficult, whether it's just physical things difficult or memory or just any number of things. But finding affordable final expense life insurance can be a little bit more of a challenge too as we get older, primarily because people know they should have this insurance. They know they should have bought it earlier. I always say that people are so busy living, they forget about dying. And someday that day is coming, and we don't know when it's going to be. So there are some challenges when seniors are starting to look for final expense life insurance. Let's start with number one, the underwriting process, probably the most confusing to people out there. And I think it's really confusing because there's a lot of companies out there that advertise on TV or send you that junk mail in your mailbox that says, hey, you know, no medical exam, doesn't matter how sick you are, just we'll insure you. Well, think about that. If this were auto insurance, do you think who do you think would pay more for insurance? The one who's got a perfect pristine record or the one who's got a few accidents and a driving under the influence of alcohol and maybe an evading police and kind of some other stuff going on, right? So yeah, the person with a better driving record would get lower rates. Well, it's no different than the underwriting process. The underwriting process would be kind of looking at that and going, well, one person's healthy and the other person's got all these health issues going on. And if you believe all the advertisements out there, you're going to believe that you're going to get this amazing deal, 995 for only 1 unit of coverage. That's Colonial Penn, right? You probably see those commercials on, seem like they're on the TV every 7 minutes or something like that. 995, but that's per unit. And as you get older, we've seen those units only may buy hundreds of dollars worth of protection. So what good is a 995 policy when it's only going to pay $400 and you want to get buried and that's going to be $10,000 to $12,000? So the pricing doesn't matter. It's really the coverage amount that matters. And one of the reasons Colonial Penn ends up being so expensive because you have to buy multiple units to get any appreciable amount of coverage. One of the reasons it's so expensive is they don't ask any health questions. When you see those commercials and they say, yeah, no health questions, no doctor's visits, no nothing like that, that's 100% true. That's not the policy you want, though, as a rule. You want first day coverage. You don't want a policy that's going to say, hey, if you die in the first 2 years of this policy, your family doesn't get any money. They just return your premiums plus a small percentage. Yeah, you don't want that. You want a company that's going to make you answer a few questions, but reward you for answering some health questions by giving you first day coverage. Because a lot of people have medical issues and they think that they will never qualify for the best rates. Oh my gosh, I've got thyroid issues and I'm on high blood pressure medications and I've got diabetes and I'm overweight and all this. There's no way I'll get covered for first day coverage. I'll just have to go with one of those 2 year waiting periods. And those 2 year waiting period companies do an awful lot to reinforce that, that's all you'll qualify for. The reason they do that is, by and large, that's the only policy they sell. So if that's the only thing they can sell, they got to market that terrible thing really, really heavily. So, when I say terrible, I mean terrible just because it's not first day coverage, right? We want first day coverage. Just understand that, at Funeral Funds of America, we're a broker. So we work with a whole bunch of different insurance companies because we understand that different insurance companies have different underwriting requirements and different health questions. And what we do is we go out and find those companies that don't ask certain specific questions, about certain medical ailments. And if they don't ask about it on the application or the request for coverage form, then we can get people approved for first day coverage. And I want you to know too that all that kind of normal stuff, high blood pressure, cholesterol, diabetes, all of that stuff, that's first day coverage with most companies. So if you've got an agent out there making a big deal like, oh, I'm going to work so hard to get you first day coverage on stuff like that, you know, it's fairly easy with most of the companies. Now, the challenge you're going to run into with those folks is, if they only work with one or two companies, you're going to end up overpaying as a rule. And it's going to be much, much more expensive versus letting us shop around many, many insurance companies. The other thing too is a lot of insurance agents say, "Hey, I have access to 30 or 40 different companies." Well, they have access to it. It doesn't mean they can sell those companies and work with them. It's like going onto a car lot and say, "Hey, I've got access to 200 cars." Well, no, you really only can use the one car that you bought, right? So just be aware that most agents aren't working with a lot of insurance companies. Therefore, they are fairly restricted. So, number two challenge, kind of talked about this already, is waiting periods. Those companies out there that sell those 2-year waiting period plans, in my opinion, they're the worst plans out there because nobody would buy auto insurance if you couldn't drive your car for this first 2 years, or if it didn't pay for an accident in the first 2 years. Nobody buy a house if you couldn't live in it for the first 2 years. Nobody would probably like date if you couldn't like hold hands and smooch and kiss and stuff like that for the first 2 years, right? So, you don't want a policy that's going to punish you despite the fact that you're in good health. You don't want a policy that's going to punish you with the 2-year waiting period when you can qualify for a plan that offers first day coverage or benefits. Because if you die in the first 2 years of a health or medical reason, the only thing it's going to do is return your premium. And with some of these companies, they're only going to return the premium and give you like an extra 7 or 8% interest. You know, um, Typically with most of the companies, it's going to be 7%, 8%, or 10%, just depending on the company. But why? If you were going to get one of those policies, why would you get one that only paid 7% and not find one that got you know 10%? So another challenge seniors face when buying final expense life insurance is inflation. Oh my gosh! At the time of this podcast, the Fed just raised the interest rate again, and it just doesn't seem like our leaders can really get control of this thing. Inflation's been crazy, and that not only affects the price of gas, but also the price of food and meat and just supplies, and everything's going up. But what that does is that means that you've got less money to pay for insurance, and insurance companies aren't immune to that either because they've got to raise wages, and then all their costs are going up. Stamps increase in price, and envelopes, and kind of all this energy, everything that they're using to operate the business go up too. So at some point, that's got to be passed on to the consumer. So it is definitely to your advantage to get this insurance sooner versus later because we just know the prices go up over time. Ask anybody that's a senior and they'll say, I remember when milk was 25 cents a gallon, whatever it would be, right? Prices just go up. So the other thing too is because prices go up, so does the cost of burial and cremation. So that makes it even more important to get this insurance because if you don't have this insurance and you can't afford that right now, you'll probably never be able to afford that burial or cremation. So get that insurance and you can just, you know, the term pennies for dollars is, eh, you know, it's thrown out around there a little bit. A lot of times these policies are more than pennies, right? Let's just be honest. But yeah, I mean, you can get a company for, an X number of dollars. If you were to die 1 month from now, they'll pay out 25,000 dollars. They'll accept that risk. So it's really an amazing way to protect your family affordable. Another challenge that seniors face when buying final expense life insurance is age limits, right? Oh, again, our seniors, so many of them, they're so busy living, they ain't thinking about dying. And that's why, I talked with a gentleman today and he was 77 years old. And he goes, yeah, what's the price on $50,000 worth of whole life insurance for me? And I said, are you sitting down, my friend? Because I don't want you to thump on the floor when I tell you the price. I can tell you, just, you know, don't wait until age 77 to buy $50,000 worth of whole life insurance. Let me just tell you that right now. because it's going to get your attention, the rate on that. But, when we look at smaller policies like 10, 15, 20, 25,000, much more affordable. And, this guy, he heard the pricing on that and he goes, nope, don't want any more information. So he needed the insurance. I know he needed the insurance. I also know that he probably didn't need 50,000. He wanted 50,000, probably didn't need it. So now he wanted to over insure. He wanted to get way more than he needed, and because the price was too high, he goes, "Nah, I'm not gonna get anything at all." And now his family suffers when he does pass away because now there's no insurance. So don't let pride get in your way. Don't think that you have to have all this insurance. What you really need, ideally, is just enough to get the job done. Kind of like an automobile. You don't need a Ferrari. A Chevy will work just fine because it's just enough to get the job done for the average person. So yeah, don't be shopping for Ferrari insurance plans when all you need is a Chevy or a Toyota plan. All right. So most of the insurance companies for final expense life insurance have age limits. And, again, our guy who's 77 years old, he's kind of right in there. Most of these policies are going to cover from age 50 to 85 years old. Have one company that goes up to age 89. But, you just understand the older you are, the more expensive it's going to be. The younger you are, the less expensive. Just because the older we get, the closer we get to our final day on this big blue planet. And, because of that, the insurance companies charge more. So just get this insurance sooner rather than later. Everybody knows they're gonna die. We just don't know when. Could be 20 years from now, could be 20 seconds from now. But get this insurance, and then you're just not going to have to worry about your family being burdened with your final expenses. And the number 5 challenge seniors face when buying final expense life insurance is we've already talked about it a little bit, the premiums. So most seniors are on a fixed or limited income. And, that is the disadvantage of these plans, but it's also the advantage of these plans. If you're on a fixed or limited income, it's going to be darn tootin' near impossible for you to start saving up and save up $10,000. Because think about it. Anybody that calls us up, if they'd been able to save 10 or 15 or 20,000 for their final expenses, they would have already done it by now. So I know by default that if they're talking to me, they're not good savers, or they just don't have enough income to save. And they're just in kind of that sticky situation where they can never really get ahead. So they can't afford the big bill, the 10, 15, 20,000, but they can afford the little bill, the 40, 50, $60, whatever it would be on a monthly basis, to make sure that their families aren't going to have to pay for this out of their own pockets, or do a GoFundMe, or do a bingo tournament, or I don't know. Is there such a thing as a bingo tournament? Play bingo or a fish fry or potluck, everybody contributing, you know, you know, people want to help out, but people can only help out so much. And when a whole bunch of people are, dying around them, people can only help so much, because typically old people have old friends and they're on fixed or limited incomes. So, um, the premiums are often a problem for seniors, but the premiums are often the solution for seniors, because if they want to make sure that somebody doesn't get stuck with this, just pay a premium and let the insurance company pay the big bill. So those are just 5 of the challenges seniors face when buying final expense life insurance. My name is Randy Vandervate, and I hope this podcast has been helpful to you. Funeral Funds of America can help you qualify for first day coverage or benefits at funeralfunds.com. That's funeral, FUNDS.com. And our phone number is 888-862-9456. We will be blessed to help you with this in the future. Until that day comes, stay safe, take care, and have a nice day. Bye-bye.